Hi, I'm Dr. Boyce Watkins, and some of you have asked me, how do you invest in an IPO? Well, IPO stands for Initial Public Offering, and that is where a company issues its stock for the first time, and anybody in the public can buy it if they can get access. So, here are the simple steps to buying into an IPO. Well, first of all, most of the big brokerage houses allow you access to an IPO. That you're talking about Fidelity, TD Ameritrade, stuff like that, Charles Schwab, etc. What they'll do is they'll require you to have a certain amount of assets with the firm before you can even be considered for participation. For some firms, it might be $100,000. Some firms, it might be $250,000. What they do is they save the IPOs for their best clients. The second thing you would do is, if you meet those requirements in terms of having that many assets with the firm, you can then go and request a certain number of shares. Now, the number of shares you get is going to depend on what they decide to do, but you can make a request to get more shares from the IPO if that's what you'd like. And then at that point, when the IPO comes out, you have to go ahead and pay out and buy the shares and all that. So, but a couple things I want you to consider is that IPOs are not all they're cracked up to be. Everybody thinks IPOs are great. Most IPOs lose money. A lot of them just don't do that well because they get overhyped. IPOs are pretty much designed to do at least two or three things. One is to let the original owners, cash out. They want to diversify. They don't want to have all their money tied up in the company. So they get to sell shares to you so they can take that money and invest somewhere else. There's nothing sinister about that, but that's what it is. Secondly, they need the cash to maybe pay off debts or to fund continuing operations as they move forward. Some of these IPOs are losing money. Now, this isn't true as much after the virus in the post-corona world. That's not as frequent as it used to be, but it is an issue that's really concerned a lot of experts who've watched what's happened on Silicon Valley. So I'm not here to tell you not to invest in an IPO. If you've got the resources and you have the access, go do it. But I am here to tell you that if you can't do it, you're not really missing out on anything. IPOs, for the most part, most of them are just not great investments. Doesn't mean all of them are bad. It just means that it's not uncommon to find one where you look back and say, gosh, I wish I'd never participated. So that's my 2 cents on the issue. If you haven't joined our Black Stock Market Program yet in the Black Business School and you want to learn more, feel free to go to theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com. Take care, guys. I'll talk to you soon. Bye-bye.